Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on October the 13th for a Forex trading and cryptocurrency analysis for the rest of the week. Now let's go to our live action screen here. We have the Forex-Trading-Unlocked.com website pulled up for you, and we are going to use from the Market Analysis Education tab, we're going to click the Workstation, and I already have it pulled up, and we have the Euro US dollar, which is the #1 component in the dollar index that is showing some promise for the bulls today. So let's see what's going on here. Alright, well, what we have here is a potential bullish engulfing line buy signal forming off of the low that was set yesterday. As you can see, the body of today's trading is absorbed almost as the whole body of yesterday and has almost absorbed the whole day. The signal is not confirmed until the close of today, so we need for the market to settle around where it's at or even higher, and that would be a short-term bullish indication that this market is looking for a correction, at least to the upside for a few sessions or so. I would key off of the low from yesterday at around 115.25. All trading below there keeps this market on edge. Remember, it is in a trending market to the downside. The trend is your friend, so be cautious, but this is a low cost, a low risk buying situation that we're looking at going into tomorrow's trading. We have to let things evolve and see how things go before we jump on the bandwagon. Remember, this is a trading signal that is forming. It has not formed yet. We have to wait until the close of today to confirm that anything like this is actually transpiring. Okay, so that is very, very important. Don't jump in front of this trade. Don't just think that because the signal is forming right now that we have this issue going on. So right now what we are looking at is a signal that is forming. It has not formed yet. So this right now, as you can see, if it does come to fruition, is a bullish engulfing line. And that is one of my favorite high probable Japanese candlestick patterns, which if you read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions, you can learn how to trade this signal. So you got to wait until after today though, because until the close of today, this is not a signal, it is forming. Now let's say that this signal does form. What kind of a retracement to the upside could we be looking for? Well, let's look at this last swing high here, and then the low from yesterday, and that puts us right into this little band here for the 50% retracement up to around $1.1716. Let's use the 0.618 as well. That gives us our target band right up in this area here. So should we get this signal to be completed by the end of the session, which is what it must do, then we are looking at a potential buy, or excuse me, upside target area for this buy signal right into this zone right here. So remember, we have to finish the day positive and above the body of yesterday for this to be complete. Otherwise, it is not a signal. So we are waiting for this to take shape. Very interesting to see what's going on here. We shall see how this pans out over the course of the next few hours. It's still early in the trading session in the US, so we'll see what happens by this afternoon, and then we will know whether or not we need to get long this market. So we'll see what's happening with a follow-up video also later on. British pound US dollar, the second biggest component in the dollar index, is also moving higher today. As you can see, it had bounced a week ago. This is already coming off of its lows from a week ago, unlike the euro. The oil trade right now is probably giving a little bit more of a lift to the British pound than it is to the euro. Remember that the UK is oil rich, so the price of oil escalating right now is giving a little lift to the pound, as well as a little pressure right now on rates going lower because bond and note prices are going up. So those things right now are fueling a little bit of relief for other currencies versus the dollar and bringing the dollar bears out. Now, unlike we have in the Euro US dollar, we do not have a signal forming. What I would do is key off of the recent swing high right here and also the recent swing low of yesterday. So look for a breakout one way or another. This would be your most highest probable chance of getting a good beat on direction. If we take out this high, that will be a higher move high after a higher move low, and vice versa. If we take out this low, well then we will be making a lower move low after setting a higher move high, which would have us in neutral, not necessarily bearish. Overall, unless there's a big sell-off in oil and a major sell-off in the interest rates in the 30-year and the 10-year notes, in which case that would give a lot of strength to the dollar. That would be a reason why I could see the pound really banging support. However, what we do have here is already we have a buy signal that was triggered off of this little 3-day pattern here. This is called a 3 inside up pattern, and that, let's see, for as far as a short-term target, you can see that we've already hit the 50% level. So the question is this current upside correction just a correction? Is it buffering up against strong resistance, which here we'd found support? Perhaps this is going to become resistance, or are we going to test support? So we'll see what happens. Right now we have a positive trade until we have a breakout to the upside above $1.3660 or a failure from $1.3566. I would stay out of this trade. Okay, so now let's go to the US dollar CHF and see what's going on here. Okay, so we have the US dollar CHF, which is selling off right now. This is a market that's been pretty much going sideways for the last couple of sessions, as you can see. One of the things you have to take note of when it comes to this right now is the fact that while the euro is coming off of major lows and the pound already bounced a week and a half ago, this market has been trending steadily higher for the past couple of months. So this one here, it's trying to show you in the Swiss that there's a lot of indecision. The interest rate issue, I think, is somewhat neutral with this. The oil issue is definitely something to be mindful of. What I would do if you're trading the Swiss, if you're not already long, which just for compliance sake, we are long, look at this. We have a potential head and shoulders forming. You have a neckline right here. You have your shoulder right here. And then you have a head right here. And we have what would be a shoulder that formed yesterday, potentially. Should that be the case, then we are looking for a continued slide down. Nice little sell-off here. We did have a sell signal back here where this head was. So for us to take out this neckline and test that, it's most likely going to occur over the next session or two. Be mindful of that. A failure from 92.28 definitely confirms that the bears are in control short term over momentum, and I would expect that you probably have a lot of your weak longs with a lot of stops resting here from your weak longs. A failure through here at 92.28 most likely will precipitate further selling action, driving this market back down towards this 91.5 to 91 even area. But let's use Fibonacci off of the most recent major swing low and swing high to figure this out. So we have the 0.618 right there, and we have the 0.5 right there. So that is our band that we are looking for. So should this head and shoulders come into fruition, we are looking for at least a test of somewhere in this downside target band right here. This is most likely where you'll see the market find a good body of support. As you can see, a lot of trading over the summertime was done around this range. So overall, we are bullish this market, but right now it's on a short-term reprieve looking for a sell-off. The Japanese yen right here, we have a little bit of profit taking going on here. I would use caution when it comes to this signal right here. It's very likely that what you're about to see here is just a short-term correction due to a little bit of a slide in oil coming off the highs and also a little bit of a rally in the interest rates in the 30-year and 10-year note. That's where I believe you're getting this. I think this is profit taking. Remember, you've had a nice explosive run up over the past couple of weeks with major blasts to the upside. Would it be outside of the realm of possibility to correct back to the 112.5 area before bouncing up? I think it's very likely. Remember, the slope right now of this trade is very high. For us to have a nice little correction to blow off before we go up for the next wave higher is very likely. So how far? Remember I said 112.5. well, according to Fibonacci, we could probably get a little bit more extreme, but this I think would be the base supporting the trend. I do not see this downside target area being violated. I think if anything, if we do have a correction, it should hold in this area and then bounce. Overall, we have a bullish target in the US dollar Japanese yen of 116, and with a longer term target of 122 sometime towards the end of the year going into 2022. 116 is a hop, skip, and a jump for if we have a nice little correction here and then get another bullish wave. Odds are that we could see 116, maybe not necessarily by the end of October, but probably sometime into November and before Thanksgiving. So this is something you want to be mindful of, especially as the Chinese continue to fly around Taiwan and invade their airspace. And now it looks like they're starting to put pressures on Japan as well. So these are things that do not bode well. Australian dollar is definitely getting some more support. This, I think, is mostly due to the oil trade. I don't know how much more to the upside it has, just because of the fact of the lockdowns and their inability to increase their trade with China, because they've been restricted by China on how much oil and raw goods materials that they are importing from Australia. Not to mention they have supply chain issues as far as getting people to work and getting things done properly to get things out and away from Australia to China. So right now we are seeing a nice little bounce. The trend is your friend. Right now I would be very cautious, though. This market could sell off in a heartbeat, and I think that you are coming into, no matter what, some pretty strong resistance that we came out of over the past two sessions by attrition. The key is, can we maintain it? Buffering this rally would be the swing high. Right here, I think, unless we can get above 74.79, which would then have us on a neutral campaign, we are still looking for a sell signal and a rally to sell with this. Overall, we have the longer term and shorter or medium term is bearish. Short run, we're neutral to positive, but running out of gas. Now, if you look at the New Zealand dollar, which is in the same trading zone, this one doesn't have quite the momentum to the upside as the Australian dollar does. I think Australian dollar has been beaten up so hard that its correction right now to the upside is exacerbated. Whereas New Zealand dollar New Zealand doesn't have quite the lockdown issues that Australia does. Their trade is more international, so they're not subject to the ban on Australian products from China, or pretty much almost a ban. So that's probably why you have more neutrality. If you look at what's happened over the past 3-4 months, we've basically been a range from 0.6890 up to 0.71 even. Not much going on here. It's a range trader's delight, but not much of it. There's no trend here except for neutral. I think this is the neutral part of this is what has helped to buffer Australian dollar and give them a little lift. But the fact that we don't have follow through to the upside with New Zealand dollar like we do have with Australian dollar currently shows me that there's divergence, and most likely we're going to see a lag and a snap back in the Australian dollar, and probably a lot of nowheresville for the New Zealand dollar, US dollar. Now let's look at the US dollar Canada. This is another currency that is benefiting from the new surge in oil prices. We had a head and shoulders here, as you can see, that was triggered. So here we have a shoulder right over here, and interesting stuff going in the markets today, that's for sure. So here is our shoulder, and then here is our head. And for those of you that are not familiar with head and shoulders patterns, it's a classical bar charting pattern that has been around and very consistent for many, many years. So here's your head, here's your shoulder, here's your head, or excuse me, your shoulder. Here's your neckline right here. We had the violation a few sessions back. Due to oil prices maintaining their bullish stance, that is giving pressure to the US dollar Canada to the downside. Also, with the reprieve in interest rates right now, where you have 30-year Treasury bonds and 10-year notes, not necessarily bid, but bouncing off of the last two sessions in a nice, pretty good rally actually yesterday. That's putting pressure on the dollar. So we have interest rate pressure that is negative the dollar, positive the Canadian dollar. We have oil pressures that is negative the United States and positive Canada dollar. Remember that by executive order, we are no longer a net producer of oil in this country, and we are also importing oil, not just having it flow through our country to Mexico or something like that, which is something we do, but Canadian oil, we are now dependent on Canada for oil. So with that dependency by executive order, that weakens the dollar versus a currency such as the US dollar Canada. So even if we do have any type of bullish momentum in the US dollar coming for our way over the next couple of months, I highly doubt that you're going to see this in the US dollar Canada. And my premonition is that these lows from the summer where the US dollar Canada bounced, we will be testing these lows probably within the next month and a half or so. This trend is not going away. The only thing that would most likely reprieve the US dollar Canadian bear is if all of a sudden you see a huge sell-off in oil. This would have to do with a turnaround in the stance from the Biden administration, which that's just definitely not happening. They're going full throttle on destroying the oil industry, and it is crippling the transports in the United States, and it's going to continue to do so, and it's going to definitely drive this currency without a doubt. So there's a lot of divergence as far as dollar strength and weakness out there. The oil trade is back on the table. This is accelerating the bulls for the US dollar yen. This is why I would not expect any major sell-off in the US dollar yen as long as oil's prices are high, just like I would not expect any major rally in the US dollar Canada as long as oil prices are high. The only thing that would change that would be if the executive order was relieved from January 20th, which is not going to happen. It was one of the only platforms that Biden ran on, so guess what? You voted for it. You can trade this. That's a nice thing. No matter what your stance is politically, you might as well capitalize off of what Sleepy Joe is doing. All right, now let's go to BTCUSD. All right, we have a short-term sell signal that is trying to form here. We'll see what happens. We have to wait till the end of the day today to find out whether or not this does occur. Now, what we do have going on in the crypto space is a little bit of divergence going on. So that's a big word for us in the trading community. We like divergence. Typically, when you have divergence, it means that you have either a turning point in one market or you have an acceleration of trend in another one due to that divergence. So the BTCUSD, Bitcoin US dollar, I've been saying for a long time, you can pretty much look at Bitcoin as very similar to the dollar index. It's not an index, however, right now it is pretty much an index for the cryptocurrency space. So as we are coming off of new move highs here in the Bitcoin market, right now I think it's more just a little bit of a profit-taking thing. Doesn't seem to be very dramatic or looking like the bears want to pounce, but I don't think the bulls have very much momentum to their upside either. Now let's see what we mean by divergence. So we have to wait until today for it to confirm a potential short-term corrective sell signal that is forming here in the Bitcoin USD. Now let's look at ETH dollar, Ethereum. This one here, as you can see, is coming off of a lower move high, whereas Bitcoin's coming off a higher move high and is butting up against resistance. You can see that Ethereum is not doing so. So this is very interesting. I would key off of this high in Ethereum right now for strength. Should we get a rally above here, that probably means that you're seeing Bitcoin rally to new move highs as well. If Bitcoin fails to make new highs, odds are that this is the lead already on a corrective move for Ethereum US dollar. So how far could this one go? Well, let's take a look. We look at this last major wave here, and due to Fibonacci, our famous technical analysis technique, you can see that this market had bottomed in this 50% to 0.618 area. This became a good buy zone for Ethereum. So we had a nice harmonic buy zone. Trend remained intact. We made a higher swing low, but now we made a lower swing high. So the question is, do we get Ethereum in the short run above this 3678 level? Now, here's the thing: is there's a valuation factor that goes on, especially when you start talking about Ethereum and these crypto assets, and as they grow into transaction mechanisms and what have you. The cost of technology can't exceed the demand and the need in the short run. So right now, where is the value for Ethereum network? Well, definitely between, I would say, where this bottom was around 1600 here. I have more like 1800 as a really good support base, but the overall average value, I think, right now for Ethereum is around 2100 to 2300, so a little bit below this buy zone. Do I think it has a value that in the longer run is good at 4,000? Absolutely. I think that is very reachable over the next couple of years and sustainable. These markets tend to overtrade. They're still in their infancy. I would use caution and look for more profit taking as you buffer up against this area in this upper 3,000 pushing 4,000 area. Unless we have a big runaway rally in Bitcoin pushing 75,000, 80,000, like making really new extreme new highs in that sector, I don't see us really lifting Ethereum too much higher in the short run. I see it more of a range trade and chopping around, but from 4,000 down to basically 2,500. So I would be looking for dips from 3,000 on down, and look for selling opportunities around where it's at up to 4,000 in the short run. We're waiting for a signal. Remember, we have divergence. XMR USD. Let's look at Monero. Here's another one that's following very similarly to the Ethereum trade. Ironically, we do have a sell signal that occurred here about a week and a half ago. So this little dark cloud cover sell signal right now keeps this market under pressure. Short run for this particular wave right here. Let's look and see where we go. 50% level, that's our initial target. So right now, this will be a good base. As you can see, this level, Monero seems to be gravitating towards this price area. And this is another one where, just like I gave you my price frame for Ethereum, I have Monero basically between 220 and 300 is my target price for value. So anything above 300, look for some profit-taking opportunities. Anything below 220, look for buying opportunities right now. This has a sustainable technology. I think in the medium run, Monero has a pretty decent future. Now, speaking of maybe or maybe not having a future, Dogecoin, as you can see, continues its trend lower, just like where we had Ethereum and Monero make a lower move high. This one has done so as well. This one continues to trend lower. I think that this basing area around the upper teens to lower 20s is going to maintain a probably good support area. If you're in this and you're looking for buying opportunities, I would say that's where you wait for. As far as selling, I'd look to start to take profits anywhere between 24 cents on up to 30 cents. I don't know how much this thing really has in it as far as even a sustained rally in Bitcoin and the whole crypto space. I think that Doge as a whole, the technology is pointless and useless and not sustainable. It's a fad, meme, pep rock, pump and dump market is what it is. So I would use caution. It's not that you can't trade it, but a fool and his money is easily parted. You want to get rich quick and you're looking for the lottery. Remember, these are things that on so many levels the universe tends to slap you in the head for taking such foolish things into incorporating into your program for making money. So just be mindful of that. I know there's a lot of supposed Dogecoin millionaires and billionaires out there, but I don't think you're making any new ones anytime soon. So just be mindful of that. Let's go back to the Euro US dollar. Sorry for those of you on Twitch. For some reason, it seems like our Twitch stream isn't working very well today. On YouTube, you guys are fine. Thank you for your inputs and stuff like that. I don't know why we're not going on Twitch right, but anyhow, we do have, once again, this bullish engulfing line buy signal forming in the Euro US dollar. We're going to wait and see what happens over the course of the day, and then we will act on these signals. So remember, don't get in front of these signals. A lot can happen over the course of the day. The Euro US dollar could be making new move lows before the end of the close today. So don't just try and jump in now and buy this signal because you think you want to get in front of a trade. You can't get in front of a signal until it occurs, because if you do, you don't know if that signal is actually going to occur or not, and then you're gambling. Don't treat trading like gambling. Gambling is a business. If there's anything you get out of today's video, take that comment to heart. Now, another thing you need to take to heart also, which would be really great for us, would be if you do us a favor and Make sure to subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked. Make sure to subscribe, like, and share if you would please. Check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, soon to be available in hard copy version as well. I'm Teddy Keckstedt from Forex Trading Unlocked. Always check us out at forex-trading-unlocked.com for all your Forex and cryptocurrency information and needs.